May profits be upon you. Welcome to another weekly Forex forecast. We're looking at the pound USD, the pound USD cable. Cable, that's what we'll call it. All right. So we're looking at the monthly time frame. We're going to jump right into this. All right. What happens? What are we looking at? Lower low, lower high, lower low, lower high, lower low. Is this a lower high? No, it's not. When does it become a lower high? When it creates a lower low, when it breaks structure to make a lower low, that's when this becomes a lower high. Up until that point, this is a retracement. A retracement to what? A retracement to this impulsive move to the downside. This is the correction to that move. All right. What we're concerned with, why is this an impulsive move? Because it broke structure, right? This is a retracement and not another bullish leg until it breaks this high. Got it? All right. Hope you got. Those are the structure rules. Okay. Now, what we're concerned with is when a retracement is happening. We're concerned with when it stops, when it ends. What gives us the notion that it ends? When it creates a break of market structure. All right. We have this high, we have this low, we have this high. If price breaks this low, we know that this retracement is over. It came close. It came close, man. And some people say, oh, well, it broke that one and all that. Did it? Did it just take the liquidity and then move up higher? That's what happened. If it traded past that, then it would have left, just left this protected low for, alone to be overtaken, but it didn't happen. So it goes up, and breaks that high. Now, if we put the Fibonacci retracement tool on it, which is specifically made for these kind of things, we go from that high to this low, stretch all the way over to the side so we can see the numbers, and you can see that we have gone well past that 786. Sorry, that 786 here. And when price goes past that, it usually ends up, turning into, ending the retracement and start the bullish leg. You understand? But what we got there was a bearish engulfer, and that means a big deal to Elliott wave guys when you have a bearish, an engulfing move at a Fibonacci retracement level. All right, this would probably be right around 90, wouldn't it? 85, 90. And but you'll see most Fibonacci tools have the 786. We're right around 80%. And we took that high. What did this move accomplish? Well, if we look over to the left, we can see that it did take some liquidity here. That was a liquidity a sweep. All right. But that's about it. Right here, we have descending highs that could be a very nice draw on liquidity, and prices could go up there and then start a push down for sure. All right. It could also take out this high, right? Trade past it, and this becomes the CISD price, or comes back to it and then continues higher from that, breaking this high. A lot of things could happen, but what I am looking for is this retracement to end. And you see the bearish move. You see August has been a bullish week, all right, kind of correcting the move of last week. But if you take a closer look, let me move this. If you take a closer look with this range of July's monthly candle, you put that Fibonacci retracement tool on it from the top. Come on, man. From the top to this low, to this low, which is the swing low, and you're looking at this candle as a retracement, we're right at 618. And you see respect being shown at 705. We're right, so we're right at levels that price could turn around and start to roll over. and this becomes the CISD, the change in the state of delivery. Hasn't happened yet. This could be, it could go the opposite way, and this becomes a CISD, like I mentioned earlier. But I think we have a higher probability with the second scenario here because we're right at those levels. We just have to wait Monday and let it decide. Monday going into Tuesday, it's going to decide for us, and we'll see which way it's going to go. All right, let's go down to the lower time frame. All right, weekly. Let me move this. What I want you to see is that there are some relative equal lows right here. Price did not come back and sweep that low yet. Those are relative equal lows. That's going to be a strong draw on price to the downside. Does that make sense? All right. We've already broken structure here. We broke that high, traded through it. All right. This becomes our area of demand. Price comes back into that demand, and and you expect it to bounce higher. All right. What are we bouncing higher to? We have relative equal highs here. All right. I think actually the market took that high. Yes, I think the market did take that high. Yes, and uh, because it's external range liquidity, I'm looking for price to turn around here. I'm looking for price to look for to offer fair value somewhere. All right, where would that fair value be? In this leg of structure, it's hard to see it on the weekly because you're looking for fair value gaps that have already, but these are fair value gaps have already been taken, have already been used. All right, we if it's not seeking to give offer a fair value, it's going to be seeking liquidity. All right, we just took liquidity here. Could we go higher? Sure, but I'm thinking we're going to come down before we do that. And there is a formidable area of demand here with a protected low as price is moving up this way. If that low gets taken, we're heading down, and I think it'll be for longer term. Watch. If we go to the daily, look at this structure right here. We broke that that market structure right there. That is bearish. All right. This becomes our area of supply. All right. This becomes our area of supply, and we'll wait for price to come back into it. And we plot. We say, where would price turn around in this leg of structure? Why not that high? Why not that high to start the impetus for this move down to these relative equal lows and down to this area of fair value? Look at this area of fair value right here, right below these lows. This could act as inducement for a price to come on down here and then find support here for, for, for higher prices. That's on the daily. That, that just rings true to me. All right. Now, doesn't mean it's going to happen. We can come up. Price could continue higher here. There's a bullish fair value gap right there that price could turn around and move higher on. Let's look at the 4 hour real quick. And what do we see here? Let's move this. All right. All right. We already swiped that high. We already swiped that high. You see the reaction to it already. What are we reacting to? We have a bullish fair value gap right here. Bullish fair value gap. I said bullish. Okay. All right. So prices coming up out of here, trying to move out. Let me tell you something. All right. There is a bearish fair value gap right here. Sorry. Right here. That price is reacting to. Come on, man. I don't want to draw it. I just want to signify it. What am I doing up here? All right. Right here. A bearish fair value gap. That price is reacting to that. If price takes out this low and takes out this bearish fair value gap, hey man, we are heading down. And remember what the higher time frame is. Remember what the higher time frame to this one. Let's go to the daily real quick. We're just going back to it. Just remember that we already took that high, and if we start to come down, we have a very thin bullish fair value gap right there. I'm looking for a reaction to that, but we're probably coming down to, at the very least, this low right here. All right, we got a little fair value gap in here, but I don't think this is going to be enough to push price up. We never took out this high, so I'm looking for price to. I'm leaning more towards bearishness, but I'm going to wait until the market tells me. All right, and that's what I suggest you do the same. All right, I think we're going to think this move here, taking that low, and price coming back up into this large area of supply. I think that's going to push prices down, and we have taken some liquidity here already. Yes, there's more here to take, but we'll we'll let the market decide between Monday and Tuesday. I'm sure we'll see what the market wants to do, and if we start to see price moving down and taking out the lows of these bullish candles and start correcting this impulsive move that we had, this impulsive retracement that we have going up, and start heading down, to start looking for sales. All right, to start looking for sales. If price moves up, it doesn't have to take out all these. It can just pop up here, take out another one, and then start moving down. You just got to let it give you a definitive break of market structure. All right, you want to see a market structure shift where it's clean and price trades through a nice market structure shift. All right, and we just have to be patient for that. Okay, I hope to see you in the next video. Hey, thank you again for watching my video. I'll check out. I'll be sending out another one for the Nasdaq, the S&P, and the and gold. And I'll see you in the next videos.